in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by Blue Sky Uranium Corporation. Blue Sky has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that's open for expansion, Blue Sky also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker symbol BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is April 3rd, 2019. Well, gold's hovering at that 1290 range. It's gone up over 1300 a couple of times and come back down, but not too much. And what does that mean for the future? Well, I have my thoughts. Jeff Clark over at goldsilver.com has his. Jeff, as you know, is senior precious metals analyst over there. And by the way, if you got any questions for Jeff or myself and you want to be a part of the show, email us kl@kerrylutz.com. Jeff, it's great to have you back. So we're seeing an interesting pattern, an interesting channel form in the gold price. What's your take on it?
Yeah, if you look at a long-term chart of gold, you'll notice that the price bumps up against a certain level there, around 1350, 1370, maybe right in that range. And if it ever gets up there, it acts as a ceiling and tends to push the price back down. And that ceiling has been in place for around 5 years now. So the longer this goes, the bigger the breakout could be once it does break through that ceiling of 1350 to 1370. Of course, I wish I could tell you when that's going to be, but I do think we are getting closer, partly because of things that are going on geopolitically. But Mike Maloney, the founder of Gold Silver, has put out a series of videos, and he did say that he thinks that by the year 2020, so in another year and a half, we will have some type of monetary event. And if he's right about that, and he made that prediction several years ago, by the way, if he's right about that, that obviously will be good for gold and we'll be off to the races.
Yeah. Monetary event. Okay. So that could be a lot of different things. Sounds like it probably has something to do with the greenback.
It could be a dollar event. It could be a debt event. It could be a bond event, and it doesn't even have to be treasuries. It could be corporate bonds. It could be It could be a non-dollar event and be a currency with another nation that just goes kaput or evaporates in a developed or emerging country. So what's happening in Venezuela doesn't really affect the rest of the world all that much. But if we had something like that in a developed country or an emerging market country, then yes, even though it's not directly coming from the U.S. dollar, it's still going to upset world affairs and would be a monetary event that would ignite the gold price. That could easily happen. So, without pinning it down to be too precise, the point is, currencies are weak, including the U.S. dollar. And yes, investors do flee to the U.S. dollar when there's uncertainty. That tends to be the currency of last standing type of thing. So that'll happen again. The senior currency does tend to get attention in times like that, but at some point the dollar itself is going to be under attack, and when that happens, boy, then we're really going to see some fireworks. So whatever that monetary event is, however it takes place and plays out and that sort of thing, gold will respond directly to that. And like I said, I don't think that's something that's going to be very far away.
Mm-hmm. Yeah, so it could be the euro for that matter, right? The euro
could be the euro. It could be a currency nobody's talking about. It, the traditional black swan argument. It could be that. When you look back at history, half of the events that have happened, you almost could have predicted, but that means half of them you could not have predicted. And so there's a lot out there, especially in today's world, and the way money's being, currencies are being manipulated, the way they're being controlled, the way they're being diluted and printed, the way the debt's, skyrocketing. There's a lot of different risks out there. And so it could be any number of events, that we're thinking about. And half of them could be things we're not thinking about. So, that argues for really holding gold right now, not because you know exactly what's going to happen, but because the risks are so high. That's the point for me. That's why I just bought more gold last week. And the whole point for me is I want to denominate my savings in a hard asset instead of a fiat currency. But the big part of it is I just see risks everywhere, economically, monetarily, with the debt, with the markets, with bonds, with the dollar, with currencies. There's risks everywhere. Any one of those could blow up and ignite the gold price, and we'll all be glad that we own gold at that point. Yeah,
no doubt. And yeah, so it's always like there's the known unknowns and the unknown unknowns. To quote former Secretary of Defense Donald Rumsfeld, and the things that or even going back to Mark Twain's, it's the things you think you know that you're sure about, but you really don't know. Those are the ones that get you into trouble here.
That's exactly right. And let's be honest here, our government leaders and central bankers and government economists have not been the best at not only managing this, but warning us. And so, listening to what they say, you almost want to prepare for the opposite whenever they come out. And, I still can't forget, and I even wrote an article about this back then, Bernanke assuring us in early 2008 that the markets are stable and the real estate market has seen some weakness, but that's normal. Everything is fine. Just unbelievable. This was the Fed chief, the person we're paying our taxes to run the federal government for us, to run the central bank for us. And that's what he told us. And look what happened. And so you can't rely on what, your own government is telling you. And they're always going to want to paint a rosy picture and assure us that things are fine. And when the more insistent they get, the more gold I want to own.
Yeah. And hey, remember during the campaign, I guess it was the 2008 campaign, and McCain said the economy is fundamentally sound. Remember that one? And little did we know.
There were literally dozens and dozens of sound bites like that from everybody in government. And hey, I know they're trying to reassure us they don't want to cause panic. I get that, but come on, be honest. You were deliberately misleading us. Either you were lying to us, or you're genuinely, and let's be nice, you're not a smart person. So.
Oh, my goodness. Yeah. And it just goes on and on and on, right? I mean, there's no end to the deception, is there, Jeff?
No, it really bothers me, a lot of things that again, our tax dollars are paying for them to, not just, protect us militarily and build roads and all that sort of thing, but they're managing the economy, and they do need to manage less and get out of the way, but the efforts that they do actually make things worse. And so, I don't know. I just think with all the risks out there, anything could pop, and it may very well be something none of us are even talking about or thinking about. And because of that, I want to be overweight gold. And if I do see, the government come out with some kind of campaign to reassure us, that will tell me that we're very near to a point where things break, so.
And you know, the bad thing is, Jeff, there's really no real country that's a safe haven at this point, is there?
Yeah, that's a good question. That's a big topic. There are some countries probably that will be better than others, but the reason your statement could easily be true is because the U.S. dollar is the reserve currency of the world. It's the backstop as far as the mainstream. If you use things monetarily right now, it's not gold, and so if that backstop goes in any manner, it's going to impact everybody simply because the dollar is used everywhere. And I know there are efforts, to use the dollar less and diversify out of the dollar by many central banks and countries. But the bottom line is it's still a large portion, the largest portion of transactions every day around the world. So if that goes under attack, yeah, you can bet it's going to affect everything. So, that's a big topic. We could have a whole series of discussions on that. But, yeah, suffice it to say that would be a very big event, and it would be global, yes.
Yeah, it would be global. And, the thing is, it could just, like we said, come out of nowhere. There's really nothing to stop it. And really, so maybe some countries will be better off. Maybe Switzerland has got their ducks in a row, although I tend to doubt any place in Europe. China could be getting the biggest brunt of it, even though they're leading the de-dollarization charge. Really, how do they decouple from the dollar from the rest of the world?
Yes, good point. Yeah. I mean, I'm partial to Grand Cayman, but even in the case of Grand Cayman, their dollar is pegged, the Cayman dollar is pegged to the U.S. dollar.
Right.
So even it would be impacted. And of course, there's a lot of U.S. influence in Cayman. It's a British territory, but most of the tourists are U.S. So even it could be impacted. But I think it probably would be less impacted because it has a strong banking system. It is independent. It is a British. Ultimately, it's not a U.S. territory. So that might be a good place. But yeah, I think the more important thing is if you're going to be in the U.S., you probably want to be out of large cities and things like that, and you want to, have some things set aside that you can live and function for a few days or a few weeks, depending on how this plays out. So, yes, it could be ugly. I certainly hope it's not. There's a lot of predictions out there, Kerry. $10,000 gold and $50,000 gold, and I got to tell you, I hope we don't see $50,000 gold, because you know what that would imply? A very ugly world, not just monetarily, but economically and all kinds of things. It would be an ugly world for us to live in if gold went to $50,000. You don't need gold to go to $50,000 to make a lot of money in this industry. So I hope it doesn't happen, but hey, the risk of that isn't zero.
Yeah.
I can't say it's not going to happen. So.
Oh, for sure. Well, yeah, and that's the problem. The future is always uncertain. So you can only do what you can do. You can't really prepare for it, I guess, is the thing. You can take out insurance policies. You can never really know what's going to happen, how it's going to run out. I mean, I have a question from an FSN member, and pretty much the question is, what is life going to be like after the dollar? And I just feel like, how can you answer that question?
Yeah, that's a big question, and it's a tough question to answer because, these things are really hard to pin down, how they're going to exactly play out and how long and what's going to be the catalyst, how will the government respond. I mean, there's a lot of factors that, make the situation very dynamic. My personal take on that is I don't think it'll be one event. I think it'll be a series of events. I think it'll be a long, drawn out process, most likely, punctuated by things that are quite serious and cause a crisis. I don't think it'll be just one day you wake up and all of a sudden we're not using a dollar or bill anymore. I think there will be overnight events, but I don't don't think the entire process of replacing the dollar will be an overnight event, if that makes sense.
Yeah.
So I think you need to prepare for a long, drawn-out thing. If you're young, I would encourage you to consider, internationalizing yourself, maybe visiting another country you would like to go to, having a backup plan that way. If you're not young, you need to be prepared for, the value of the dollar losing a lot of value, going down and losing a lot of value. So, that argues right there for owning lots of gold and silver. That's what I'm doing. I'm preparing for that. So I think it's, it'll be a different world. The U.S. will be probably, and this won't happen, next year, but the U.S. will be something like Italy. It'll be there, it'll be functioning, but it won't be a super dominant world power.
Yeah.
Because its dollar is not going to be used universally anymore. That's the path we're going on. The question is, how long does that path take to play out? I think it'll take years to play out. But again, it'll be punctuated by events that are quite serious and that will serve as a catalyst for gold. So,
yeah, and the trend's pretty clear. So recently, just wanted to go over something with you. You wrote an article a few weeks back, The Hidden Profit Inside Silver Eagles. I mean, I'm not quite sure what that means. A Silver Eagle pretty much sells for the bullion price per ounce. It's an ounce coin plus the premium. How is there a profit hidden in there?
Yes, great question. I'm glad you brought it up because not many analysts out there have written about this, but there is literally a hidden profit. So I'll give you a clue here. So I was speaking at a conference in Vancouver in 2011. And if you remember 2011, that's when gold and silver were going bonkers. The prices were rising a lot. Silver almost got back to 50. So I told the audience that, look, you can actually make a profit when you sell your gold and silver back, and not just a profit on the spot price, but a profit on the premium. And to prove it to myself, I took a tube of, I think it was silver maple leaves, a tube of those Silver Eagle maple leaves, and down to a dealer there in Vancouver, right on one of the main drags there, and I sold it, and I was paid, drum roll, above spot.
Really?
Yes, I was paid above spot. And the reason is partly, obviously, because of demand. Demand was skyrocketing, so they needed metal, and they were willing to pay for it to get it back to sell to other people. Right. The other reason, though, the hidden part of it is the U.S. Mint, and all the government mints do this, but the U.S. Mint is one of the most egregious, but they raise the seigniorage or the surcharge that they charge to the APs, the authorized purchasers. So what you'll see is there's when you buy a coin, there's actually 3 layers of premium there. The first layer is the U.S. Mint's surcharge, the seigniorage it's called, the authorized purchaser fees, because the Mint doesn't sell to dealers like gold, silver, they sell to authorized purchasers. Correct. And then the authorized purchaser tax on a fee when they sell it to the dealer, and then the dealer tax on their fee when they sell it to you and I. So there's 3 layers of fees there. Well, if you bought a mint case of Silver Eagles today, the silver price is about the same as it was in August of 2008, before the crisis. Right. Okay, so the silver spot price is about the same, right? But the mint box, the premium on that very same mint box is $360 higher today than it was in 2008. And the silver price is the same. And it's all not because gold silver's raised their fee. It's not because the APs raised their commission. It's solely because the U.S. Mint has raised their seigniorage or surcharge. And so every dealer has to pass that on. So you're paying today $360 more for a mint box today than you were in August of 2008. So when you go to sell that back, there's a floor there, if you will, on what Silver Eagles have to be charged because of the seigniorage. So you can get more back. But let's play this out. So if you're someone like me who believes that silver could go to $100 an ounce, okay, so let's say you think silver is going to go to $100 an ounce someday. Meanwhile, by the time between now and then, the U.S. Mint is going to raise the seniorage fee again, probably twice. The seniorage fee has risen 50% just since August of 2008. Okay, so they're going to keep raising it. So if silver is at $100 and the premium increases 50%, that's still only 25.5%. Okay,
right.
So you will pay, the premium on a mint box would be $12,750.
Right.
Well, you can buy a mint box today for $8,000 or $9,000.
Sure.
So the premium alone in that kind of environment would be more than what the entire mint box costs today.
Wow.
So there's going to be a lot of room in there between what you pay today and what it will sell for then, where you can be paid above spot and not only recoup your premium, but maybe even make above the premium that you paid.
That's pretty remarkable. So if you pay
$1,200 in premium today, but it costs $12,000 in premium then, you could be paid $5,000 in premium, and that's still $6,000 below what they're going to be charging.
Wow, that's pretty amazing. Well, I think you'll want to get a copy of that article. Just email us, kl@kerrylutz.com, or just go over to goldsilver.com's website, search for that article. I think it's kind of must reading if you're at all interested in precious metals in the sector. Anyways, Jeff, so we find you over at goldsilver.com, right? That's where all your writing is found.
Yeah, it's all right there under the news or blog section. And by the way, I should mention real quick, Mike Maloney and myself and Alex Daly, the president, just recorded a podcast, and it was just released this morning, so perfect timing for your audience.
Oh, excellent.
On storage. And it starts with how I had gold stolen for me. So it's an interesting podcast. Your audience might want to check it out.
Yeah, well, hey, and if you sign up for our newsletter, I will send you out our report on how to store your precious metals for free, have 24/7 access to it, and probably in some of the most secure localities in the world. There's a little trick involved, and there's some caveats, but you can do it. Anyway, Jeff, it's always great to have you on. Again, kl@kerrylutz.com. Questions, comments, and go to our website, financialsurvivalnetwork.com. Sign up for our newsletter. Jeff, it's always a pleasure to have you on, and we'll talk to you again real soon.
It was great to be with you, Kerry. I'll look forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.